The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman, Tiger Technicians Hour, the Friday edition. Yeah, every single weekday. That's market weekday. Monday through Friday, 11 o'clock till noon Eastern Time. Right now, this is when you're listening, and this is where I'm on. And the number to call, of course, is 877-927-6648. Friday, we usually do a little bit more on the Chapman wave methodology. Questions come in, they're a little technical, and we look at them in a little bit more detail than we normally would. And well, let me just show you something right here. The E-minis at this particular time are up 6.50. 1843, that is just a point and a half away from, 1844.53. Yes, that is, wait a minute. Let me just go through this again. Because, so that's 1844 round number high. So that's not, why is that a D? 18, excuse me for 1 second. 1844. Because it's in the 120-minute chart. That's right. So let's go through this. We've got a huge leg A to a peak B in the Chapman wave methodology. Oh, I should have put that CD on. Oh, well, I'll do it during the break. From the 1732 low of the 5th of February, you have soared in a single leg up to 1844.50. 1844.50 is a tad under the 1846.50 of the left side peak back in, that was December the 31st, the last day, or last trading day, and the last day of the year, of last year. What happened is it pulled back yesterday, hit the 9-period exponential moving average at 1815. Let's just see exactly what it was. 1817.25 was the low, and 1815-ish is the 9-period exponential moving average, that black line. Bounced, ricocheted, boomerang, right back up. And what's happened is we've made a high today of 18, this is the E-mini March future, 1844. It just needs 75 cents higher to go to a potential leg B. Now that leg B should still be, I should make that gray, I should still keep it gray underneath the previous high. But the moment it breaks out above 1846.50, it doesn't even have to close there. It just has to pop above it to 1846.75 or higher. And I have to go back to changing the color to make it blue. In this case, this is the way I notate. And that blue would suggest that there is a strong enough buy mode in place. I've already put the up arrow, so there's no way I can't call this a buy mode. That should go to a leg D. That's the premise of the Chapman wave methodology. Look at this. The 120-minute chart has made this kind of a U pattern. It's actually really more like one of the patterns I'm not a great fan of. Of course, it doesn't matter. The pattern doesn't care whether I'm a fan or not. It's the cup and ladle. But actually what's happened is everything is underneath the previous high of 1844.50. If there's a spike right through that 1844.50 area into the 1846.47 area, that would be really, really positive action. And then say, okay, you know what, now we can have a bit more of a rest going into next week, maybe by Tuesday or so. But in the meantime, this is really strong action. One of the reasons for my opening call, that's my daily newsletter. It goes out every single day by 8:35. I've sent out everything. It's the last chart called the Traders Corner, updating all our different things. And folks, just for those subscribers, I will get to number and update it. I forgot to put it in that we were stopped out of number 9 from number 9. So for a small gain, but the issue was that I was hoping to have it sustain the move because it's starting to act quite well. We might get back in. I just didn't want to take a chance because of the pattern. If it actually pulled back a little bit more, that would have been if I was acting. Let's go to all the numbers. The Dow is up 42 at 16,176. Now, to me, let me just go to this chart here. This chart, right? This is what I show my subscribers every day. There's this great detail. It tells you exactly what to look for in the VIX. Look, the VIX is down 57 cents. That is a positive, and it says that the cup formation that we're looking at will be negated if by Tuesday the VIX pulls back under 13.70, and right now it's at 14.22. There is the high-level consolidation right in that blue line. I discussed that 200-period exponential moving average, and it's holding really well. Well, look at this. Here's the Dow of the chart, the chart of the Dow of the chart. And the stochastics at 88%. That's good. MACD is expanding. And what we've done is I had said that there would be limited upside action today. I mean, anticipating a mild move to the upside, and that the 16,170s and then the 16,190s would probably be the resistance to watch. And the high today so far is 16,191. So I'm watching this closely, but what's happened is that inverted Roman candle right there of the February the 19th, if it gets into, it's already there. But if it trades decisively above 16,180, and right now it's at 16,170, if it can do that, then there's a real good chance that within a day or two we should be testing 16,225, probably make leg C. And then I'm starting to get a little bit more cautious, not necessarily in leg C, but probably in leg D, going into the latter part of next week. That's just the way we work the Chapman Wave methodology. Now look at this. The S&P, SPX, the S&P is at 1847.50 was the high of just 2 days ago. I have not updated. I thought I had updated this 120-minute chart. Let me just do that now because it's Technical Friday. So there we go. A. Remember, identify the lowest, most obvious low bar. That's this bar right here. The bar of the 5th of February at 11:30. And then you start a buy mode that goes to a buy signal that goes to a buy mode that goes A, B, C, D. Now what you've got, something very interesting, because it is definitely either that the MACD held, so I can't put a down arrow there, and the stochastic held, so I can only put a plus sign that says there's a chance that with a move like this, it could be continuing in the letters just sequentially. So the high here is 1830.25, so this is, so let me do this. I'm going to put a down arrow in there, and then an up arrow, right there, and I'll explain why. You see this peak A, peak B, peak C, and peak D? That basically concluded another buy signal to buy mode. So I would have to, I couldn't go E, F, G, G/C, and then it goes to a D. I suppose I could have, but I would have still had to put the down arrow and the up arrow. Why? Because within 3 bars, it did not break to a new high after peak D. So now what's important is that 200-period moving average is saying, wow, I am the springboard for this particular move. Remember, that's what I was showing in the Dow chart that I show my subscribers every day right here, right there. The 200-period moving average has become a springboard. But it's also saying that the number of moves to the upside and then the number of moves to the downside with a full-blown pullback says that the upside is a little bit limited here, and it needs to regenerate and reactivate a very strong a move to the upside, and that's going to be done by the VIX pulling back, and in terms, let me just go to this, and in terms of the 120-minute chart, that 9-period moving average becomes, I like to say it's walking the black line, walking the 9-period exponential moving average. However, there's a little trend line right there, that says you better go underneath that 9 EMA so that we can keep supporting you on the upside. So I am just, I wouldn't say I'm cautious, but I'm just a little bit hesitant here. I believe that we should make a nominal new high in the S&P, maybe today or Monday, and that would be B. The main thing is, how does the S&P power right through 1850.84? As I said before, if the S&P powers through 1850.54, I don't know if I've got any choice but to say that that is a brand new leg A in the weekly chart. If that's a brand new A, we are going to be going up into April. I mean, that's just the way the methodology works. Unless there's a double top that says, I double topped, it is an A, but that A is going to abort. Very unusual at all-time highs to abort in an A or a B. And then it pulls back, and it pulls back in time and some price, and it goes 1817 right now, 1844.23, starts to break 1817, goes down to the 1805. I don't know what it'll do. It'll have to be very negative news. You've got to get bad news to keep pulling back in the market. So let me run the numbers, then we'll take the calls. Gold right now, let me just quickly check. Gold is up $5 at 13.22. Silver is up 0.04 at 21.73. High-grade copper just stuck in that 328 area, and we've got bonds. Let me see the TLT right now, 106.31, up 20. It's holding the 105. It's very important support, and I'd like to go to our first caller. We've got Freeman in Dallas. Hi, Freeman. How are you?
Pretty good, but thanks a lot for not making me go short that SMH.
Good.
And my question is about lumber liquidators. I was waiting for a pullback, but I just decided today when it pulled back a little to go in half of my position, right, at this way it's at right now. What do you think about that?
L is the symbol. Lumber liquidators, bargain lumber products. And this is very interesting, folks, because we haven't done anything with the home builders for a little while. I wanted to get them again, and it just seemed to me they weren't quite ready, but believe me, they have been doing very well. So lumber liquidators is obviously a supplier to that whole industry. And in the daily chart, A, B, oops, you can't put an N and a V if your fingers miss the keyboard. It's a B, and then it's a C, and now it's in a leg D. And it's probably, oh no, it's already made a peak D. So you just started a position right now?
Yeah, but I just put half of my position.
Okay,
I saw
good.
that stochastic was holding out well, so.
Yes, it's at 87%. The MACD is good. The weekly is making a W formation together with the actual price itself. And if at any point lumber liquidators takes out the high in the arch pattern in the weekly of 108.03, right now it's at 103.05, that would be very positive and suggest it could even go all the way back to the top. The weekly, the monthly chart, I've had a little problem with this. There's no other way I could count it other than to say G/C. And my thinking here is that it probably is a C, peak C in the monthly, especially with the action so far. We have to wait for the month to finish. Now, this is going to be very important. In terms of the daily chart, let me grab the 120-minute chart. Oh, nice. Okay, so now the 120-minute chart, I'll just quickly put in the Chapman wave methodology here. So up arrow, easy to put the up arrow at the bottom of a chart that you've already got a lot of price activity on, because there's no way I could not put an up arrow since it's already moved so high. So the up arrow was really perfunctory. So that's an E and that's an F. Yeah, that's what I thought. I looked at this the other day, decided not to really get any position in it, but in fact, I think you might be onto something. I'm going to just do a little more work on this during the break. I'll be right back with Freeman. Can you hold on, Freeman?
Yes, I can. Thank you.
Okay, I'll be back. We're looking at lumber liquidators. Break in the second entry.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. We're back with Freeman in Dallas. We're looking at lumber liquidators. LL is the symbol. 103.05 down 62 cents. Now, there are a couple of things that are going on. I just wanted to mention it was brought up in the den. I remember reading about it. Kind of slipped my mind, but it was just refreshed right now, that lumber liquidators is under investigation for possible violations of the Lacey Act. That's a law banning illegal harvest and trade of wood and timber products. It actually is a very interesting law because some musical instruments and some instruments that you have to have certain wood to be able to produce the very best sound have been impacted. Not only that, some great instruments that were imported, were actually confiscated and then burnt. I mean, I just don't understand that. I understand you can go through the process, but once it's done, why burn it? However, so I just wanted to mention that. However, it's got nothing to do with the chart right now. The chart has got that H pattern in the weekly. It has a very strong, the month isn't even close to being finished. So far, the pattern's very strong in the monthly. And the weekly is at it's almost like the Dow. It's had a very strong move to the upside. Only difference is that this has already made a peak D, but it's a nominal high, a 104 round number. I forgot to type that in, 104. Always have to watch those round numbers real closely. High. And then it pulls back to 103.90. Oh, wait a minute. 3 days in a row, 104, 104, 104. Ha! That actually turns out to be a positive. I'll explain why. At 104, it should have pulled back very sharply as if it was being repelled, especially at a peak D. Secondly, if it had pulled back, it would say, you know what, if it pulls back any moment it goes to 104.01, be somewhat careful because it's breaking what would be a pattern of pulling back at a certain point from the round number, and it just says, this is not working. This is just continuing its up move. I tell you what I do like about this. I like that the weekly chart, and this being Friday, the day's young, we've still got quite a few hours to go. I would love for this to close above 103. Now, I did say to my subscribers that I thought that towards the end of the day, even though I saw an upward bias, excuse me, I do see a bit of a pullback going into the close. It might not be. That's just kind of what I was looking at. So, Freeman, what I'm going to say to you, you've got your first position. I'm going to ask you to hold off only because of the way the 120-minute chart is acting. The 120-minute chart looks like the 102.50 to 101.50 area is possibly going to be hit by Tuesday or Wednesday of next week. And that'll only happen if it cannot break 104 by Friday or sometime intraday Tuesday. The way I'm also looking at it, 101.70 is the 9-period exponential moving average, but that 200-period day moving average, 200-minute moving average right now says that it's bounced sharp enough that it might have completed its magnet draw back towards that 98 level, and in fact it's trying to free itself. So if at any point lumber liquidators goes to 104.55, 104.75, that says you've now got what was a magnet, you've turned the magnet around, and now it's a propellant. So I'm looking at this, and I think you have a nice first entry. What I am going to suggest is have patience. If it breaks to the upside, you can buy a pullback after that to add to the position. It's okay. Going to the upside, even with half a position, is still very nice. But I don't want to see it break under 101.70 by Tuesday afternoon or Wednesday morning of next week. So I'm going to suggest hold off on the second position. Let's see how it holds through Monday, maybe even part of Tuesday. And sometime Tuesday, give me a call if you're around. And if it is holding nicely above 102.70, in fact, if it's even holding in the 103.50s, that's going to say, hey, this is holding very well, and there might be a second position to put on, but I wanted to hold the first position first. I'm prepared to give the first position, as I say, 1.5, maybe even 2 points of it. I don't know what kind of stop you wanted, but I think a 1.5% stop on a stock like this at this particular point for a half position is good enough. If you add the second position higher or lower, I'd rather be comfortable that it's doing what we want. And what we want is that I don't want this bar that it made, the beautiful bar of yesterday, filled in. Because there is a chance that the long-legged doji of the 19th is really telling me there's a trading boundary between 104 and maybe 98. I don't even want to go there. So let's do this one step at a time. You've got a nice little entry now. If you want to add to it, let's wait until Tuesday, maybe Wednesday, okay? Thank you so much for calling. I always appreciate your call. Freeman, we were looking at LL. I'll be right back. Dow's up 35, S&P's up 4.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, Ron, we're back, and while we're at the break, I did a whole bunch of notations on to complete them in a 120-minute chart. All those biotech, the biotech sector, the IBB is just soaring. It is up today again. It is up, and I missed it. It's over there at 270.35, up 4.89. This is going into mega phase, and I have to tell you something. To be short right now, I would not be looking at that. We've been trying to avoid as much as possible being short. We actually a week ago just missed a few cents going along the Don IBB, and now it's up about 12 or 13% since then. Amgen, monthly D, weekly, I've got an alternate wave count of GC, and that might have made that previous D the top, and this would be A to B to C. And there's an explanation for that, and I won't go into it right now. But there's an F/A in the weekly, and I'm looking at the stochastic, which is at 81% and turning down. So this is going to be very important Tuesday and Wednesday in stock like Amgen. Is it making some short-term top here? The 120-minute chart says be a little bit careful here. So that's Amgen. Look at BIB. That's Biogen IDEC. I think they have a huge plant, a couple of plants right here in Massachusetts area. There's a biopharma, a huge biopharma. This is leg. Good grief. This is leg in the daily. The same thing here. I have to call it a B. I don't know what else to call it. It's a B. It could be a G, but everything about it says that's a brand new buy mode. So it's going to hyper acceleration. And as far as the weekly is concerned, I'm again going to call this a C. You know what I'm getting? When I get them all in the same thing, it gives me clarity. Now I can say that I think we're going into the first week or second week of March with these biotechs screaming and maybe lifting the Dow. You know what's interesting is that gold, GLD is down a little bit today, but gold has been acting very much like the market, and that happens periodically. Gold goes up, the market goes up, and the GCG is trying to tackle the 1332 level. That's the 200-period moving average resistance. But in fact, I'm going to be watching this real closely because stochastics at 90%, that's good. And it's trying to treat that 200-period moving average like a magnet. So that's a good sign, because if you put it together with the EUR-USD, which is in at peak B, but holding very nicely above the 9-period moving average, we've had this before, where if you've got the NASDAQ biotechs, if you've got the gold, and you've got the euro moving together, they essentially very often help the market itself, the general market. Question about dust. Well, that's a particular position that you might want to consider over the coming day or two, Tuesday to Wednesday, Monday to Tuesday, but only as a short-term trade. I don't yet have a sign to say that that gold will pull back anything other than, let's go to the GLD. Yeah, it's just missing making a leg F. That could recycle. That could be a period moving average at 128.46. I'm going to have to say that at least for this particular phase, Joe, if you want an intraday down on Sunday, and of course you can't trade this until 9:30 in the morning, but maybe Monday would be an opportunity just to grab it and just take whatever you can. Dust would be trading, let's see, 1981 right now, almost at its at its recent low, and under the 200-period moving average in the weekly. Monthly doesn't look too great. I would say that you could buy it if you want to on Monday. If gold is weak over the weekend, and we do get some kind of a pullback in the general market, which would be, you can't expect that. I mean, this is a little overextended, however you look at it. Then you could see a nice pop. And since it's the gold miners 3 times BR, direction daily, so that's three times negative gold itself. That's the GC contract, which you could use the JLD kind of as a proxy. I would say a bounce, and I just have a trading stop. Start the bounce thinking you can go from 1984, maybe you only get it at 20. 21.35 would be the first resistance, 21.98 would be next. There's a chance, just a chance, that on a very short-term basis, if it bounces, it could bounce towards the 24.81 is way too much. I think it bounced towards the 22.90, 23.10 area. That would be an outside chance, and it would just be a very brief pullback, and then we'll have to reassess. Maybe it's the start of something that's a little deeper, but I do it one step at a time, and that was dust. Isn't dust the GDX? I'm sorry, you're absolutely correct. I believe dust is the GDX, and the GDX right now is, in fact, thank you for reminding me about that, Gungo, in leg D, right on the 200-period moving average, and that's where you can start to get a lot of yo-yoing. But remember, 26.62, the 200-period exponential moving average in the daily, that's going to be a magnet. So even if you go down, you're coming back up. Even if you go up, you're probably coming back to retest. Probably between 25.50, 25.74 is the GDX, the gold mine market vectors gold miners ETF. That 25.74 to 25.26, that's the support area. And I'm suspecting, if I draw a trend line in right here, that the bottom of that candle, that was the close, and 26.98 is probably, that's 26.98 to 27.15. I'd say is probably going to be a limit right now for the GDX. Yeah, so there's a potential as a short-term trader. Netflix, let's do that. Most of the biotechs that we were looking at had the same kind of pattern. Now, there's a chance that we've seen the intraday high already for the day being options expiration. I say there's a chance because it's at between 220 and 310. If you start to see weakness come in at that point, they could push it down. If you start to see strength, they could push it higher. That's going to be the area that you got to watch real closely. But in terms of Netflix, on a very short-term basis, this is very interesting. I've got a G/C in the daily chart. There's a doji candle. If it closes at 428, there's a round number low the day that it made its all-time high of 441.24. Now it's saying a close below 428 on the short term. It says be a little bit careful here, although there should be more upside to come, even if it's in a sideways trading range. And I'm going to draw this right now. This is a Chapman wave. There's the leg, there's the body, that's the stalk leg formation. It's kind of a narrow one. I usually like a little bit fatter, but it has all the prerequisites. So it could pull back. My suspicion is it won't break 428 before it has another rally. That rally, if it breaks 441.20, Netflix will probably go to 444 to 446, and then that'll be later next week, and then you got to be careful. Somewhere in that area, there could be a pretty sharp pullback as the neck and the head and then the beak starts of that particular pattern. So now let's just do, I don't have a signal just yet, but the chances are, with the general market still acting well, and Netflix being one of the leaders going to all-time highs, having traded at 441 just the other day, 441.24. Why did I say 20? 441.24. I would not go short Netflix, not at this time, even though I'm getting some signals very near term to say, hey, could pull back to that 428 level. I mean, 4 points on a $432 stock or even 6. I just don't think it's worth playing the short side because it could easily have a big spike to the upside. Now, I wanted to do something else. We're about to finish this segment. Before I did that, what I really want to do is I want to look at something I haven't looked at for quite a while, the XLF. Now, my thinking has been for some time that the bank stocks had a spectacular move and they needed to do some consolidating. And they've consolidated. The XLF, which is the financial ETF, the S&P financial ETF, went from the 2216 area right there on the 15th of January down. This is a pretty sharp move, down to 20.50. So that's about a 9% correction. And for this particular index, a 9% correction, it really doesn't have that many. It had one back in, I think it was May of last year. So in this particular instance, how it's climbing, this, I can't even call it a wall of worry in the market. It's not even that. It's more a blasé, a kind of a, shrugging the shoulders. I'm not in the market. I don't really care. I am in the market. I do care, but it's doing well, so I'm not going to really panic about it. I've never seen such indifference. When I meet people at a party or anything like that, I don't hear anybody talking about the stock market. That's not to say that they aren't in it, but the buzz is not there. Not even the IBB, not even the NASDAQ area. Yeah, amongst the aficionados are always buying and selling stocks. They're talking about it. I'm just talking about my wife, for instance. She's not talking about anything like this. So until we see that moment, I don't think we're going to be making any kind of major top. So I just wanted to go through the XLF because it's really important in terms of looking at the weekly chart, having made that silent doji, then a nice long-legged doji on the week of the 17th of January, retesting it the following week and then failing. Coming back to the wick this week, the wick low was 21.66. The week high this week is 21.74. It actually opened at 21.66. Isn't that interesting? 21.74, trading at 21.53. I think it needs just a little more time. And as I'm watching this, I'm saying, wow, you might think it needs time, but a break above peak B of 21.74, and this little baby is going to make a V-shaped recovery going to 22.16 or higher. So I don't want to really miss a move like that. So I'm preparing. I didn't want to do anything today, although I thought about it very carefully. I wanted to see how the action was today. Over the next couple of days, I might be thinking in terms of the XLF in this rotational market because the sectors that have held well are very different to the sectors that are failing and not showing any strength and then showing a little bit of strength and then going right back. This is saying, no, I might show a little bit of weakness like I did 2 days ago, and then intraday yesterday. But look how I've come right back. And that to me is very important. Shows in the 120-minute chart the same type of thing. And what's happening? That 200-period moving average in the XLF and the 120-minute chart. Look, resistance, resistance, resistance. Support, support, support. Resistance, resistance stuck like glue to this particular line of the 200-period moving average at 2154. MACD and stochastic are improving, but they're not great. So I think it's really worthwhile watching this. Now, when I talk about a rotational correction, what I'm saying is that there are some leaders who had a pullback and have just gone right back to being leaders. So they've had some kind of a rotational correction. Then what we've got is we've got stocks like I had called the other day on Coca-Cola. So Coca-Cola, I said, I think it's going to retest the lows on the left side, and that low would be 37.10. Well, lo and behold, yesterday and the day before, it went lower. It went down to 36.89. Now it's trying to bounce, but I don't see this. The weekly, I think it's going to do the same sort of thing. Those are defensive stocks, the Cloroxes, the Procter & Gamble's. Now, Clorox has held, but it's still, monthly chart is not that good, and the weekly chart is very poor. It says that probably 88.77, and CLX is trading at 87.63, maybe another 1.5. It could even complete this move, make an A to a B. I think it's going to fail. I'm going to watch it closely. Procter & Gamble, another one. Fantastic stocks, really great companies. This is holding a little bit better. But I don't think that they've actually started a brand new move to the upside. Not yet. Now, I might be wrong by the time I recognize and say, oops, sorry, everybody, they are doing very well. Procter & Gamble could be in leg C up at the 82 level, and it's at 78.80 right now. But the proof of the pudding is in the patterns. And these patterns say that we make a high, we make a low, we test the low, we test the low, we test the low, and they've just done it 3 times in the weekly chart. So I'm watching a stock like Procter & Gamble. Believe me, if I see upside action in any of the defensive stocks, I'd love it because you get a dividend as well while you're holding those stocks. So they're on my watch list. Let's go to Brent in Martinez. Hi, Brent. How are you?
I'm doing just great. How about you, Basil?
I'm doing well, thank you.
I'm calling about the symbol is SGG. It's ETN for sugar.
Right. So, do you have a position?
I have some calls out to May. Calls on.
Nice.
So I'm long.
Okay. So, folks, we're looking at the ETN. It's called the iPath Dow Jones AIG Sugar ETN. And ETN means that they've got the paper. They don't actually have stock. There isn't any stock there. So that, when you're trading these, once they've proved themselves, they've been around for a while, there's really not much you can do. You're either going to trade them and take on the risk that it's a paper product and it's really secondary to everything else. But if they've shown that they've had the capability to survive markets for a while, then I don't have any problem trading in ETN. Now, I'm trying to finish ABCD, and that's, what is that? We've got a break coming up, so that's E, F, and that made a G. I thought I'd redone this. Okay. All right. I like the chart, so there's nothing to rush into. Can you hold on while I do a little bit more work? I want to show the sugar chart as well.
Yeah.
Great. I've got Brent in Martinez, California. We're looking at SGG. We're going to be taking a close look at sugar as soon as I get back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, folks, we're back. We're looking at the SGG. And in fact, right here I have the sugar continuous contract. I love what I'm looking at. I think I'm not sure that you needed to go so far out, but it doesn't matter because you can take your profits at any point, Brent. But I'm looking at this. I've got leg C. It's gone 1 penny above in the continuous contract. It's gone, and it's 1 penny above. Yep, 1 penny above in the continuous contract above the left side high bar of the 31st of December at 1694. Most importantly, there's a target that I would have between 1720 and 1780. The 1760 level is a 200-period exponential moving average. That will only kick in if in the next 6, maybe 7 trading days, it takes us into not next week, but the next week after that, it can break 1688. Yes, if it's able to close at any point above 1720, that's the high of the 10th of December, then it has a chance to go all the way in that move to the 1760 level, the 200-period moving average in the daily. Now, I want to do the contract itself just real quickly. It's SPH 14. What do I see? I see almost the same thing. Yep, it's also broken about 1658, 1660. Great. Yeah, it's exactly the same thing. Now let's go back to SSG to see the relationship. Oops, SGG. SGG. What is SSG? Ultra short semi pro shares. Oh my goodness, I better remember that. SSG. Okay, so the SGG is trading at 56.01. It has gone, it's already way above that level. No, it's not. 56.61, 56.01. Okay, here we go. If in this leg by Monday or Tuesday, in this leg C, it would be great if it's in this leg because the MACD and stochastic are good. You could see 50, 55, 65. Oh, wait a minute. Oh, there it is. 56.61. If it gets to 56.61, then there's just a really good chance that your leg D will go in this particular contract somewhere into that gap below 57.10 and 56.80. Right, it's the same sort of thing. So I have a target on this of about 56.80. If you're still in the trade and the stochastic and MACD are holding really well, that says the weekly chart's finally starting to kick in really nicely. This is the first week I can say, Friday is the close. Today's Friday. It's just got a few hours, that there's a good chance it's going to close above the 9-period moving average. I love the trade. I'd love to look at it again maybe next week, Tuesday or Wednesday.
Thank you very much, Basil.
And congratulations for that entry point, and it's a very nice trade. Thank you for calling. So that's Brent Martinez, and now I just want to run these things through. We've got to close today. We've got options expiration. I'll tell you what I'm looking at. I like the fact that there's been a slight upward bias. I like the fact that the resistance that I pinpointed for my subscribers is being hit. I like the fact that the VIX is pulling back. The one thing I don't like is that there's some leadership stocks that I'm looking at here, and GE is one of them. We got out of our GE trade for a tiny little loss. I just didn't want to hang around. We got out at 25.30. We were in at 25.46, and now it's at 25.06. And GE's been a heads up. So I'm still expecting that we're going to go into next week. It's going to be a strong week, but sometimes towards the latter part of next week, it might be the very beginning of the following week. That's when we might make some kind of a top, and I'm watching GE real closely to tell you whether or not that's going to be the indicator stock to keep in mind. IBM is still doing quite nicely. Triple M is doing okay. Yeah, my Dow Quartet are doing okay, but they aren't really leading here. Actually, UTX, which is my pilot line indicator stock, is leading, and that's a good sign. I still want to remain long. I like what I'm looking at. Getting a little bit cautious as we move higher, but I haven't done anything yet about it on the short side. Expecting a little bit of weakness into the close. Have a wonderful weekend, everybody. I'll see you back here Monday, and stay tuned for Nico and Payne.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This is TFNN.